Hi there folks, hopefully you are well. Now for those of you that have been following me over the years, you'll often heard me say in the past that in order to make any success in the markets, you've got to have a plan. You've got to have a trading strategy. I don't think I've met anyone to date that can make money consistently in the markets just by trading from the seat of the pants, as it were, thinking this looks good and this looks bad and basically making a living out of that, basically having no structure to their trading. And with that plan, you need to have a strategy. Now the strategy is basically a simple set of trading rules that tells you when to buy and when to sell. And you've often heard me say in the past, there's two ways that you can trade the markets: using fundamental analysis, that's looking at the macro picture, the big economic data releases and the general health of the economy, or you can use technical analysis. And I think there's two types of technical analysis really that we focus on. First of all, you've got the technical indicators. Now I've been covering a few of the technical indicators in my past videos, but then you've also got basic price action. Remember I did that video there on the engulfing patterns and pin bars and so forth. But there is another way of looking at pure price action, and that's using chart patterns. Price patterns are basically comprised of looking at a whole bunch of these candles or bars or whatever way you're looking at the actual price. When you put them all together, you get to see a picture of what's happened to price in the past, where we are now, and it can give us clues to where prices may go in the future. So today I want to talk to you specifically about that, about different chart patterns, or the most common chart patterns that a lot of traders use these days. And the other great news is we've done one of our cheat sheets for you as well. So right after this video, you can download the cheat sheet, you can get it laminated, print it off, put it on your desk, and then you've got a reference guide for when you start looking for these patterns in your trading strategy building phase. Make sure you watch the video first and then download the cheat sheet. Okay, so let's have a quick look then at chart patterns. You notice I had a quick change of shirt. Blue background, blue shirt, wouldn't have worked. Right, okay, so before we get into showing you the most popular chart patterns that traders use and how you could potentially use them yourselves, I want to talk about the main difference between chart patterns and technical indicators, which are both forms of technical analysis, looking at charts to help predict the future. Now, the technical indicators, of which there are literally hundreds, we've covered quite a few here on the channel, the MACDs, the RSIs, the Bollinger Bands, moving averages, and so forth. Now, the technical indicators basically derive from price. So they're basically mathematical calculations that will help us predict where prices may go in the future, basically taking what's happened to price and put them into some formula and so forth. Whereas the chart patterns is basically looking at price action much more holistically. It's basically looking at pure price, which is a result of human behavior. And often, as we know, human behavior tends to repeat itself. And that's why we look for these patterns of human behavior to help us predict what might happen in the future. So ultimately, the decision is yours. Are you going to use technical indicators in your trading, or are you going to use chart patterns? Or perhaps you might want to use a combination of the two. So maybe look at chart patterns, human behavior, and then maybe use a technical indicator for an additional filter. But whatever route you decide, I suggest you put this through additional research, extensive backtesting, before you start trading this with your hard-earned cash. Now, there are basically three ways that we look at chart patterns, or three reasons why we could look at chart patterns. First off, you've got trend continuation. A trend continuation obviously is when markets are heading in one particular direction. We look at chart patterns to help us predict when that trend is going to continue on. Or we could use chart patterns for reversal as well, counter trend, looking for a big move in the opposite direction. And the other way basically is indecision, when we're having a potential consolidation period, ranging markets. We know the markets are going to break out one way or another, and we can use certain patterns to help us predict a breakout, although we might not know which way the breakout is going to go until indeed it starts to happen. And we'll try to discuss those as well. Okay, so let's start off by looking at some trend continuation patterns. Now, all the trend continuation patterns are pretty similar in what they're showing us. They're basically showing us we've got a trend in play, and then we've got a new level. Now, this new level that we're seeing up here is what I call the price acceptance level. So it's basically accepting this new level. We might have had markets moving around in this range around here, but now we go into trend. We've established a new level. Two things it can do. It can either come back down ultimately, or it can continue. This is basically accepting this new price level, and it puts in this rectangle, basically the same highs and the same lows, forming a rectangle at the top of a trend. Now, the way I like to play a rectangle for trend continuation using price patterns is to see a breakout of that rectangle and then trend continuation once it's had that little pullback, such as this. So you see we've broken out, pulled back, and then trend continuation, looking for the next level. And this is, of course, exactly the same in reverse. The trend continuation to the downside. Here you see we have a downtrend in play. Now we've got this new level. The market is accepting this level. It hasn't had a massive pullback. We're seeing the same levels on the pullbacks. It's basically forming a pattern, which is a rectangle. As you can see, this is a rectangle at the bottom of this downtrend. If the market were to break out, retest and continue, that's the way I would like to play a trend continuation using a rectangle for further price acceptance. You may, as I say, want to use this in conjunction with other technical indicators, maybe support and resistance as well, by looking back left of the chart to see what's happened at previous structural levels. But that's basically the rectangle for bearish continuation. So now let's look at the ascending triangle. Now, again, the same type of price action. We are in a trend. We hit this level of resistance. We pull back. We move back up to resistance. We pull back. And every time we pull back, the lows are getting higher, therefore forming this ascending triangle. So this is an ascending triangle. Okay, it's indicating price consolidation with higher highs, indicating potential breakout and trend continuation again. So the ascending triangle, bullish continuation. As I say, I like to see a bit of a retest and then continuation, but that is basically a bullish continuation using an ascending triangle. Again, it's price acceptance of this new level. And of course, exactly the same in reverse again. This is a descending triangle. So price is in a downtrend. We hit this level of support, bounces off it a number of times, but every time it bounces off, it basically makes a lower high, creating this triangle, indicating consolidation and indicating a potential breakout. And indeed, if that does happen, your trend continuation would be to the downside. So once it breaks out of there, as again, normally the way I like to trade them is after the breakout to see a retest before it actually goes. But again, you want to use this in conjunction with other technical indicators possibly. But that is a descending triangle, bearish continuation, acceptance of this new level, and then finally a breakout. So I'm sure you may have seen that out there on analysis before. Okay, so now let's look at the bullish flag. Now, the bullish flag, again, it's a bit of an awkward one to see visually initially. But again, this is a bullish flag. We've got price moving higher, making higher highs. Then we have this pullback, and the pullback is creating lower highs as we go. Now, this could turn into a reversal. However, if it puts in this flag formation, and I think that's why they call it a flag, because it basically looks like a flag. If it breaks to the upside, that could be an indication that this trend is now going to continue. Of course, if it just keeps on going down, then you're not going to be trading the flag until it actually breaks the top of the flag structure. And indeed, that would indicate potential then that the trend wants to continue. The bullish flag for bullish continuation. And of course, the same on the downside. We are in a downtrend. Okay, we hit some support, back up. Okay, so again, creating this flag formation. Now, you're not going to be trading this on its own until you actually see a break of this flag formation. Indeed, markets might want to reverse right back on itself. But if you're looking at the bearish flag formation, you'll be waiting for a break of this trend line here in the direction of the trend for bearish continuation. That is a bearish flag. Remember, I'm going to put all these on a cheat sheet for you as well, so you can refer to them in your own time after this video. So make sure you stay tuned to the end so you know exactly what we're talking about. Okay, this is a bullish pennant. Now, it's slightly different than the ascending triangle. Again, we've got the momentum to the upside. We are in an uptrend. Okay, we are having a pullback. We are seeing the lower highs, but we're also seeing higher lows. So that basically means these are converging. This is known as a bullish pennant. Now, once it breaks through to the upside, again, a retest for it to continue would be a bullish continuation pattern. Again, if you see these at key levels of resistance, then that is a good sign that this trend now is going to continue. I particularly like this pattern myself because every pullback it's having basically is creating a higher low, indicating that the sellers are maybe losing momentum. So I do like the bullish continuation, bullish pennant signal myself. And the bearish pennant, same thing. You got the bearish trend, makes this low here, and then pulls back, and then continues on. But now it makes a higher low and a higher low there. But the reason, again, why I like these is because the pullback is losing power as we go. So it's actually making lower highs. So the bearish pennant, I think, is a particularly strong signal. If you certainly see this at other key levels of resistance to the downside, could indicate that this indeed does want to continue once it breaks the low of that trend line from those higher lows of pullback. So those are the 4 key trend continuation patterns that traders use, I think. They pretty much all tell the same picture. You've basically got a trend, consolidation, price acceptance, then a trend continuation after a breakout of that particular pattern, potentially a retest and then continuation. And that's the way I like to trade them. But now let's talk about the trend reversal patterns. A lot of traders like to use these patterns to predict the turning points in the market, which can be quite explosive indeed when they happen. So first up, let's talk about the head and shoulders pattern. Apparently this looks like a head and shoulders. Well, let's explain. So you see here we have an uptrend. We create a high up here and then a swing low and then a new high, and then the pullback comes back to pretty much where the previous pullback came, and then a new high again, pretty much to where the previous swing high was, and then back again. So this is a classic sign of a potential reversal. And the head and shoulders pattern traders basically look or think of it like this. This is the head of that particular pattern. This is the left shoulder, that is the right shoulder, and that there is the neckline. Now the way a head and shoulders pattern trader would work it is basically saying this distance here, the distance between the head and the neckline, would be the target price. And indeed, if it breaks through the neckline, they would take a sell trade, and the stop would be potentially above the recent swing high, or basically above where that recent shoulder was. So this is a bearish reversal pattern. So stops above the shoulder and target price the same distance between the head and the neckline. That is basically the bearish reversal. Same in reverse. We've got a bullish head and shoulders pattern. So here we have a downtrend. So this is actually the same as you've just seen, but in reverse. You've got the head down there. You've got the 2 shoulders. Remember, these do not have to be horizontal lines, but thereabouts. I've seen some analysts come up head and shoulders. I thought, is that really head and shoulders? But whatever rocks your boat, I say. This is the neckline, okay, and the distance between the head and the neckline would basically be your target price. So if the market breaks up through the neckline, that would be your target price, and you take the long trend. This would be a bullish reversal, and same thing, you'd maybe have your stop below one of these shoulders, and your target price up there. That would make for a good risk reward ratio, looking for a trend reversal. Now these are particularly interesting if you see these at key levels of support and resistance further back in time, looking left of the chart. But as I say, go and do some research analysis and some back testing yourself to see if you can find some really powerful ones as well. But when they do work, they can be quite powerful. Now let's look at the classic double top. Very simple price action pattern. Often these are very powerful when you see these again in conjunction with previous support and resistance. In the case of a double top, you'd look back at the charts looking left to see previous levels of resistance, pivot points, or what have you. If the market hits the double top twice, respects it twice, fails to get through it twice, this is an indication that this wants to roll back on itself. And a typical way that traders may trade this would be a break of the recent swing low just before the double top would be their entry, and their stops would be above the double top giving for a good risk-reward ratio if you're looking back at the next level of potential support. So this is a bearish reversal at a double top. Often you'll see a triple top, okay, maybe even more powerful if you see a triple top. Triple tops, double tops, they basically do exactly the same thing. It just basically means how many times it actually hit that resistance level in the case of a double top. And of course the double bottom would be the same, but would be in reverse. So we are in a downtrend. We bounce off support a couple of times. Okay, so this now means we may have a potential bullish reversal coming in. We'll take a buy trade above the recent swing high. Breaks up, comes back, pulls back, and then off it goes again. You may have your stops below there. So a double bottom, or indeed a triple bottom, can be a good clue that the markets are about to reverse on themselves. Okay, so let's finally look at the range breakout trade. Now, typically traders looking for a breakout could be using a symmetrical triangle. Basically in a range market where the market's not doing very much, you see here, not going up, not going down, just making a high, a low there and a high up there, just basically ranging. And then it goes into this ever decreasing range with lower highs and higher lows, that price is basically converging, and it puts in this pattern looking a little bit like a symmetrical triangle. Now typically a trader could use this by looking for a breakout from the upper or lower bands, the lower edges of that triangle. So they may take a long trade if it breaks up to the upside, knowing now that price is waiting to basically move on another explosive move in either direction. And typically what they might do there is have a target price, which is the same as the base of that triangle. So when it started going into that ever descending decreasing range, then that could be the distance of the target. And another way of trading this would be maybe to have your stop placed below the recent swing low. So you may have your stop placed in there or something like that, with the target price up there. Makes for a good risk reward trade, waiting for that explosive move out of that decreasing range. We might have it to the downside, of course, exactly the same, but in reverse. You may have your target price will be the same distance as the base of the triangle, and your stop could be above the recent swing high of that triangle pattern. So that is another way that traders could use price patterns to enter and exit trades. So there's just a few examples. Hope you found them useful. But as I said at the beginning, you shouldn't just be using these as a standalone. Maybe do this in conjunction with support and resistance. Maybe you want to put in a filter of a technical indicator as well. But using pure price action, I do think, is one of the best ways that you can trade the markets. As we know, human behavior is always repeating itself in every walk of life. So why doesn't it happen on the charts as well? Well, indeed, I think it does happen. Okay, so I hope you found that useful. Now, don't forget, you can download the cheat sheet in the description tab below. Just fill in your details and you can basically get that printed off, get it laminated, stick it in your library of content that we're dishing out here on the channel. If you like the video, give me a thumbs up, give me a thumbs down if you didn't. Don't forget to leave a comment as well. If there are patterns in there that you're using successfully, please do let me know. I am by no means the whole authority on chart patterns. I'm always looking to learn as well. Don't forget to follow us on all the socials, and of course subscribe to the channel. Bell notification notifies the moment the next video has been released. I'll see you next week. Have a good week, and thanks for listening.